Hey guys, Akil Stokes here, Forex trader and trading coach over at tier1trading.com, and I want to hop in and share a special video with you guys. You see, recently I did a podcast called How to Shorten Your Learning Curve, and I also recently received a question on social media asking about, can you talk a little bit about active trade management? And it just so happens that today we discussed both in my live trading room, so I thought it would be a video that's very beneficial to all of you guys. Now, if you're interested in joining the live trading room, you can do so as part of your 14-day trial membership. Just head over to www.tier1trading.com, click that 14-day trial tab, and you get access to the website, the community chat, a training course, the trading edge videos, and the live room, some software, a whole bunch of stuff. But most importantly, that trial membership doesn't auto bill, so you don't have to worry about if you forget to cancel, you'll be billed automatically. Once your 14 days is up, it's over. So give that a try. Check out this video. If you like what you see, please do me a favor, hit that like button, hit that share button, and subscribe if you're new. Also, leave me a comment if you have any questions. Again, your comments are what spark Trading Coach podcast episodes, and they're also what inspire me to share videos like this with you guys. If you guys remember, New Zealand dollar came down and I'll show you it real quick on the screen. It came down and tickled the targets for like a week, not a week, a couple days. Where are we at? Where are we at here? Are we down there? No. This was one where my targets were right here, and I was doing the same type of questioning. I can actually roll these. Yeah, there we go. Look at that. That's how you lock in some profit. So worst case scenario now, basically, I'll get both targets off at target one, kind of. Does that make sense, guys? I don't know if it was someone here asking about trade management. I think it was on Instagram. But you see that we basically created a level of structure here. Or let's back it up some. Back it up like a pickup truck, right? So my targets are right here at 21, right? Because of this level of structure. And we came down and we almost missed it here, right? And then we just missed it here, and then we just missed it here. And over the weekend, I'm looking at this, and I started asking myself, I'm like, was there a level of structure that I missed? Right? Because we were so close, and I started looking back. I'm like, all right, 21s, was there something I missed, right? Because this has happened to me before, and I didn't see anything. But that's a good example of like the difference between having a target like right here below this wick and right above it. Now, fortunately, it came back and hit it, which is good. But that's something I always consider. I always look, and when I do my review, I'm like, okay, did I miss something here? Was there a Fibonacci there that I missed out? Like, draw your fibs on. Was there a Fibonacci here? No, we're right at the 618. That's what I measured off originally. But like maybe there was something hidden there, right? You just try to wonder. And sometimes you do, like in this, I did nothing wrong in this case, right? But sometimes you miss out stuff. Sometimes I miss out on stuff. Sometimes there's a hidden level of structure where one of you guys Paul types in, hey, Keel, what about structure looking left? Oh, crap. Didn't even see that, Paul. Thank you. So it happens, and this is the part of the constant review and critique that we're doing in the markets, and this is how we get better, right? We're our own coaches, essentially. So instead of like, you have a basketball, you're an athlete, and you watch the film, and you have a coach that reviews it and says, hey, man, open up your hips a little bit too much. Oh, okay, yeah. We have to do it ourselves. We have to watch our own film, and we have to be our own self-critiquers. Or I know some of you guys have accountability sessions. I know many of the traders actually meet up maybe once a month or once every 3 months and talk. Maybe it's one of those things where each week you find an accountability partner here on the platform where, Owen says to Raymond, hey, at the end of the week, I'm gonna send you a file of all the trades I took. Look over it. Let me know what you think. And then the next week or the same week, Raymond sends his back to Owen. Is like, okay, well, here's what I took. Let me know what you think. And you get a different set of eyes on the market where Owen's like, hey, nice trade there. Looks like, but why were your stops right below there? And of course, instead of getting all angry and whatnot, we're like, well, yeah, you're right. And you just get better that way. So you can either do it by yourself or do it with an accountability partner. But the fact is you have to do it because that's how you learn those little things like having stops right below structure, right at structure. And honestly, like our eyes get bored. I mean, a lot of you guys are looking at the charts a lot. Like your eyes miss things. They get bored. They get tired. You guys ever back test and realize that you missed a trading opportunity just because like your eyes are just monotonous and just going through the same thing, or the process is monotonous? Yeah, it's the same thing in trading. Especially if you have a set portfolio where you're looking at the same pairs every day and you think you know everything because they don't move that much. Sometimes you move things or you miss things. So extra set of eyes is good. Extra set of eyes is always good. And for me, this is one of the benefits Latch talked about earlier with the YouTube videos being as helpful to him as anyone else. This is why I value the live rooms, because this is a daily critique of my work. Not only does it keep me accountable in following my rules, because I can't break my rules, because at least one of you guys will shoot me an email saying, hey fella, remember that New Zealand dollar trade where you said your entry was a lower low lower close? Yeah. I looked at that. I didn't see a lower low lower close. I'm like, and I gotta lie, and then I'm not gonna do that, right? So it holds me accountable. I have to be consistent and follow my rules. But it also helps me, by showing you guys are going to point out something if I missed it. You guys point it out all the time. Hey, what about that pattern? Oh, crap. Yeah, I forgot about that. What about that level right there? You're right. Good look. Or even trades that I missed. So it helps me just as much as hopefully it helps you. But real quick with the trade management, because I don't think it was one of you guys. I think it was a social media that asked this. Here's how you reduce risk, right? I couldn't really do much in the beginning of this trade. But you can see we put in this structure shelf here. A test for teaching. Yeah, you're right. Good one, OG. You see this structure shelf right here, guys? Once it was violated, right? You can roll to here, right? And then what do we do, right? This is why the basics of reading a price chart is important, even though people think it's not, right? This allows you to roll here. Or roll above there, right? So we're just originally we're reducing our risk. Now we're locking in profit, and this makes your trading life so much easier when you know that the worst case scenario, right? You've already put money in your pocket. The worst case scenario, if this trade goes south, is that you still make 44 pips. Is that not a good worst case scenario? Hey, Akil, worst case scenario is I make some money. Yeah, I didn't make as much money as I could have, but I still make some money. Like, that's... Obviously, you want to make profits, but it's much better than having that heavy weight of like, oh man, there's 100 pips at risk. Oh, I can still lose it. Right? Trade management is key. I would tell you this. It is it's the thing I've focused on the most after becoming successful. Right? After I became successful, and it took a long time, you guys know the story, to become successful. After I became successful, let's put it this way. Becoming successful taught me that really the strategy is not the most important thing. Like, I used to think the whole thing, what's the holy grail strategy? What's the best strategy? There's got to be a super strategy to make the most money. If I want to make more money, I got to trade more strategies. That was kind of my normal caveman mindset. Once I kind of focused on the mindset that it's not about how much you're trading, or not about the best strategy, it's more about finding something that works and just consistently exploiting that edge, and then money management really does the work for you, right? The key is, how can I flush as much money into the market as possible? Let's back it up. That's the key. Hope you guys understand, right? Like, imagine me and Cody playing a game where whenever Cody wins, I give him $2. Whenever he loses, he gives me $1, right? So Cody's got a positive expectancy. Would you guys agree? That if he plays the game long enough, he's going to make money. So there's two things that Cody can do. Cody can ask me, how can I play the game as much as possible? When you look at the bigger picture of algorithms and automatic trading, that's what people are doing. They're saying, okay, well, I'm playing this game. How can I automate it so I can play the game 24 hours instead of just playing it 5 hours a day, right? The frequency. Or Cody can just up the bet. If he doubles the bet, so now he makes $4 whenever he wins, and he gives me $2 whenever he loses, right? He's upping the bet. That's the thing with trading. right? We have an edge, and obviously the edge is more dynamic than that remedial example, but just to get the point across, we have the edge. Now it's like, okay, well, my edge makes me 30% a year. Let's say that's the number, right? 30% a year off of Cody's $1,000 account. Let's say $10,000 account, right? 3,000, correct? So if Cody wants to make more than 3,000, if his edge is consistent and he wants to make more than 3,000, what are Cody's options? You can say he can trade more. You can find more frequency, but there's a ceiling to how many trades he can find. Let's just be honest. He can trade more pairs. Yeah, but if you trade more pairs, then you got to reduce your risk or you got to reduce your position size, right? Because now you're putting more risk on the table. You don't want to be overexposed. So he can't really add like a million. He can add a little bit more strategies, but that's going to affect his position size per trade. The solution is he can do the same damn thing he's always been doing, just with more money. Instead of trading a 1 lot, he can trade a 2 lot. Instead of trading a 2 lot, he can trade a 3 lot, right? So now all of a sudden, Cody's still making 30%, but now he's got a $50,000 account. So that 30% is a lot more than what it was when he had a $10,000 account. So that's the key. And what helps with that, again, is obviously managing risk. The less risk you take, the more aggressive you can trade. What I found is that once I had a strategy or a way of trading that worked, it wasn't necessarily adding more. There were some things like, again, obviously you want to get better with target taking, stop placement. For me, entries, becoming more aggressive with entries to take advantage of all the trades that I miss. We talked about that earlier. But something that I really saw that made a difference was just focusing on risk management. I don't necessarily want to minimize the amount of losing trades that I take by not taking certain trades, but how can I reduce how much I lose when I lose? Does that make sense? So if I average 50 pips per loss, is there a way I can take that average loss down to 30 pips? And by reducing your loss, what does that essentially do? Not essentially do. What does it do? It increases your wins, or how much you take home at the end of the day. So it's addition by subtraction, right? Same thing with budgeting, right? People complain about, oh man, I can't save as much. I don't have enough money. There's 2 options, right? The hard one is working more jobs. The easy one is spend less, right? Reduce how much you're spending and you won't make more money, but you'll keep more money. Same thing in trading. Reduce how much you're taking risk-wise on your losses, and you'll keep more money. You won't give as much back. Now, there are times, obviously, when the more aggressive you are at active trade management, you are going to cut yourself out of some wins. So that's, we talked about earlier, the balance of life. There's pros and cons to everything. So, it's not a perfect situation. But when you're trading, you're not trading on the perfect situation. The whole premise of trading is you're doing something that works more times than not, right? We're not looking for anything. No strategy works all the time, but Drew's strategy works more times than it doesn't work. Cody's ability to trail stops and manage it helps him more times than it hurts him. And that's all we're looking for. And that's that mindset we have to break where it's like it has to work all the time. No, it doesn't. It just has to work most of the time. Or it has to work enough of the time to be a benefit for you. So in a situation like this, again, worst case scenario, we run up and do something like that. Now, instead of taking a loss, obviously you want to break even after you hit target 1. At least that's my opinion. Never give anything back. But instead of taking the full loss, instead of taking a break even on second half position, I've just earned 44 pips by simply trailing. Hope you guys get that. I just made money simply by risk management. And if I get a chance to do it again and roll it down, I'll earn more money simply by risk management. And small things like that over time add up, and that's what really helps your edge in trading. It just gives it's a minuscule change, right? It's a minuscule change that has a massive difference, bigger picture. this would be the perfect time for another Earth analogy. But I'll save you that because it's time for our break. So I'll see you guys in 13 minutes. We'll come back. Latch said he got short New Zealand, Canada. Let's just take a peek at New Zealand, Canada. Did we get a pullback on that, Latch? He says psychology is ridiculously underrated. Is it ever? Yeah. So you see we got a little bit of a pullback trade here. If you guys remember, I kind of erased my notes. I think we're looking on an 8 range, but we can see it here anyway. We got our pullback in the structure. Back up to 84.88s. You're looking for 84.50s. Right, Latch? So plenty of room.